Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to be taking a look at the week ahead analysis. It's not going to be I don't think the greatest week of trading in terms of lots of news. However, could be a heavy volatile week. Now, let's jump onto the news that is forecast for us, and we have some monetary policy meeting minutes out of Australia. We have some GDP data out of Canada, and then we have some data out of the US, which I don't think overall is that going to have that much on the effect of the markets going into this week. Obviously, then we have Christmas Eve and Christmas Day, so there'll be no trading going on here whatsoever. But I think the news is really going to focus on Omicron variant and the risk of the rising cases of the coronavirus. And reason being is because we're starting to see a lot of restrictions coming in. We are seeing the likes of, or what you can see here is basically just screenshotted off Google, some various different sources about what's going on around the world, and we can see here, we're having some warnings that the Omicron variant is raging across the US. I think it's in 44 states at the moment, and that is quite significant in the US, so it's spreading rapidly there. Obviously, we could be seeing some fresh restrictions in the UK, due to the fact that the Omicron variant is rising. And Australia is saying that Christmas could be cancelled with 1,000 testing positive for Omicron. And what we're seeing is that the Netherlands are entering lockdown. So lockdown restrictions are coming into play. I don't think we're too far away from it in the UK, to be honest, with the fact that so many people now are testing positive for the Omicron variant. But essentially, cases are rising. I think this is what's going to have the biggest effect on the markets going into this week. I think we're going to see a lot of risk-off sentiment, and some safe havens benefiting from the back of that. Okay, so keep an eye on all of this going into next week, because it's going to be, I think, quite an interesting one, considering we do have usually a very light trading week this time of year. Don't think we're going to see that this week. Now, the strength meter is going to be a little bit out of sync with the markets, I believe. Last week, we saw a lot of strength in risk currencies, a lot of weakness in safe haven currencies. So the risks that I'm talking about, basically, we can see here on the strength meter that the Australian dollar, this grey line, has shot up significantly, has jumped 7 places. Kiwi has bounced from this reversal zone and moved higher. Dollar has dropped all the way through. I actually think this is a bit of false information from the strength meter, because what we saw was, obviously it was the case for large majority of the week until sort of the end of last week, where I think more headlines from the Omicron variant came through, and it kind of pushed the market into a risk on mode. Okay, so if we actually go and have a little look at the dollar index, for instance, we can see here that the when we did the video, the forex market wrap, we were around about this area and price was just pushing up, and we were talking about whether the risk in the market was, or whether the dollar could break to the downside and move out of this range. I think if we do go into risk off markets and the risk of the Omicron variant is shown in the markets, then I actually think we could see the dollar break to the upside and the market being used as a safe haven. So yeah, I actually think that the dollar could continue to strengthen going into this week, potentially, if the restrictions kind of get worse and lockdown comes about. So moving on. One of the currencies that could be affected is Aussie. We talked about Aussie US dollar moving down throughout the whole kind of previous sort of headlines of the new variant and things like that. That pushed prices down for the Australian US dollar. That could happen again going into today, going into this week. I think, last week it looked like we were getting the change in trend. We had this inverse head and shoulders. Looked like price could start pushing to the upside. However, now that risk off could be coming into the markets due to various restrictions, Aussie US dollar could be affected quite deeply. And I think if we trade back below the 0.71 level, I think this could be one to watch for further short ideas. Going on to gold, I think gold may be one of those that could benefit from the safe haven situation. We saw last week that price took out the weekly lows, it rallied back higher, made a new higher high. If we saw a retest back at these previous highs and buyers start stepping back in, we could see that safe haven play continue, and we could see prices back towards the sort of 1850s all the way back up into the 1870s. So an interesting one to kind of look at going into this week as well. If the case is that we're going to see risk off, then stock markets shouldn't benefit too well from this. I think if we kind of take out the area that we're in at the moment, price could come all the way back down into these weekly lows. If the variant risks continue, then it's likely that we'll see a further decline in the stock markets, and we'll probably see prices back towards the previous swing lows, which could actually provide some really good long opportunities. It may be in a couple of months' time. So, if we do get that drop, then keep an eye out for longs. But in the meantime, I think in the short term, I think short ideas are probably best. We'll have to see how the market opens and takes the new news. But we could see some extra downs. So I'll leave it there. I hope you enjoyed this video update. If you did, leave it a thumbs up. Subscribe to the YouTube channel to watch some more of our Forex content, and I will speak to you in the next video.